Well, good afternoon, everybody. Hope everybody's doing great today. And welcome to my channel. This is Useful Forex Trading. I call it Useful Forex Trading because a lot of strategies out there are just not very useful, just to be honest. I've tried many. I've tried playing the Forex market like a gambling casino, and I've lost way too much money that I care to talk about. Being a rookie at the time, you're a newbie, you make a lot of stupid mistakes. Unfortunately, can't go back and change it. So you have to learn and grow from it. And today, I just wanted to add to my other video, which was the 15 moving average strategy. And there's variations of that, of course. A lot of people have a different interpretation of it, and that's okay. But today I wanted to talk about a commonly known strategy that's been around for probably forever, I'm sure. And it is what is known as the London Breakout strategy. Now, many people will draw a box, in their area. For example, they may come up here and draw them an Asian range box for whatever reason. Something, it'll look something like this, for example. Although it won't be extended. Let me take that out of there. Don't extend, right? So when price comes above the range, they're looking for a buy. If price comes below that range, they're looking for a sell, basically. Now, some people will set buy stops, sell stops, or whatever the case may be, once price breaks above that range. And I'm not saying this is the range. That's just an example of what it will look like. But they will put a buy stop in there, and the problem with that particular method is price doesn't break it. Sometimes it'll just spike, creating a FOMO. Market makers will entice people to jump in a buy if price tends to move up, only for them to have to bring it down. They'll come up, hit stops, they bring it back in the range, come back down, hit stops, pull it back into that range. They may play around with it for a while. It may break out again, straight on up. Anyway, there's a couple of methods that you can do as far as, mapping out your box. Some people just like to do it on their own. Some people have a good eye for doing that. Me, I don't always feel like looking for it, drawing it out. I usually tend to like something a little bit more simplistic myself, especially if I'm tired and I'm one-eyed and I'm trying to wake up. Although you should always trade while you're alert, so that way you can analyze the markets properly and see what's going on. But what I do use to help me with that, and this is a wonderful tool. Now, any indicator, as you know, is just a tool. It's not a the Holy Grail indicator. Nothing is 100% Forex, as we all know. But when you're trying to take higher probabilities trades, you want the probabilities and things to be more in your favor. You want as much correct probability as you can to take a better trade rather than a silly trade due to lack of information or because you just made a simple mistake. But what I use for my strategies most of the time, for my London breakout, if I can manage to get up at 2, 3 o'clock in the morning, which is the London Open here on Eastern Standard Time, 3 a.m., 3 a.m. to 7 to 8 p.m. as it bleeds into the New York session, but typically I'm going to want to be done no later than 5 or 6 in the morning, pre-New York session. This indicator right here already maps out the Asian range, and this is Eastern Standard Time from 8 o'clock to 2 a.m. This next candle is 2:30, 3 o'clock on the Asian range. The London session open. This is when London session is opening at the 3 a.m. And I got my chart time set for New York Eastern Standard Time, so that way I always know. This thing will map out for you, and there are other indicators like Asian session. There are ones that you can find that'll map out. It'll kind of highlight and does the Asian range as well, just as accurately as this, but it doesn't give you the range pricing and all. This one here will not only map out that Asian range so you can clearly see where the breakout points is. This middle line, this gold one right here, is what I call the range medium, the median range, middle of the price. So for example, come in, say if that range was 39.6 pips, and halfway through that, okay, 19.8. So you get the idea. But normally what happens is you're going to see this indicator is just a great visual tool. It could actually help you, and this even goes off way into the New York session, because sometimes price isn't going to wait, okay, 3 o'clock now, it's time to break out. Sometimes the market will decide to do it even in the Asian range at 2 a.m., 1 a.m. or something. But often more than not, you're going to see the price break out of this Asian range around 3 or so, quite often. They're not going to do it every time, and they're not going to make it that easy for you. You just have to be diligent and be patient. Just wait the market out. This indicator is best designed, I believe, for somebody who likes the 15-minute time period. As you can see here, around 3 a.m. it just happened to be at 2:45. Candle broke out pre-London. Pre-London open, candle broke out in anticipation it probably was going to move. There may have been some news coming out or some sort of anticipation. Sometimes prices worked into the news. Just to give you an example, the market breaks out, you wait for the close of the candle. This comes up. If you're looking for a quick 20 pips and dip, you just got 27 pips just in this one particular candle. Came back for a retest, you got a 3-candle Trojan right here, like Trojan horse or whatever you want to call them, the 3 little soldiers, I think a lot of people call it, came in back into this range. Well, actually, I'm not even seeing that range right here. Maybe in a different time. Doesn't matter. You see that formation. Market took it back up again. Here's your typical little breakout. Came back to retest. You got you another bullish candle. Here's where I ought to come in at for a second chance, a second entry. Once you saw this, this is a typical. You're going to see this a lot often, 15, 30, or a 1 minute, probably more than any. A retest situation where price comes above that particular level right here. You go in for another buy. If you're looking for another quick 10 pips, that just happened to come up another 29.5 pips roughly. Now it's easy to note this, you know, after the fact. Once the market has already played out, yeah, anybody can come back and say, "Oh yeah, look what it did. If you'd have did this, if you'd have done that." Okay, but past proves the past proves the future present. So it's like, and then it came back down for another retest. A lot of people tend to trade this pattern. I know some people do it on US 30, NAS 100, and whatnot. Price comes back into this certain particular level. Once it gets down to this price, you know, they're like, okay, when it gets into here, price breaks out of this certain major zone right here. They're going to wait for that retest, come in, and then take the market back up. There's all sorts of, you know, little techniques that people may play out, and that's fine. But just for this particular video, I just wanted to show that you can grab you some quick 20, 30 pips, 10, 20, 30 pips on the London breakout whenever that just happens to play out. This particular pair, British pound US odd. Let's look at another pair, for example. GBP JPY. Let me get one. I got so much mess on it. Okay. Another example. 30-minute time frame. 230. Candle moved up. Per your rules, if you're looking for it to break this candle, the top of the wick of the last previous candle, it broke that wick. Came up. That was 12 pips. All right, 12 pips. You're like, you know what? I got my 10 pips. I'm gonna wait for the retest. Market actually shot up on that next candle and broke back. If you're waiting for it to come back into this area right here, forming another green candle. That's when waiting becomes worth it, to kind of see what the market's going to try to do. Came back in right here, took it up for another 13 pips. And this is what I'm talking about, this little range right here. This is what your break and retest for another break to bring the price up. The market decided to bring it back down to this particular level. They played around with it. Now news came out. Market took it back up. News came out. They came down and took out a whole lot of liquidity. I mean, they went to take just about anybody and everybody out they can, and then they ran it right back up in the direction that it was supposed to go. GBP, JPY. Now this scenario is a little different on a 30-minute chart. As you can see, done a lot of ranging within this market right here. A lot of ranging. Did break out a little bit, FOMOing, trying to get people to, you know, take the bait. Can't let that fool you. You got to have some rules. Even if you did take the bait, you thought, oh man, I got a signal right here. I'm going to run that up. You might have got, you know, 10 pips right here just by accident, but the market took it right back down. It's teasing you. And here has been a mess. This is just a lot of what I call trapping traders, you know, to get you in. The news came out. It finally broke this move, shot it back down. Price came above this range again, broke above these candles. I can't think, believe it came up above the 4-hour wick. I think it was right up in here somewhere. And the market took it up for another 13 to 18 pips or something like that. Now that was a trade that I took. Grabbed a quick 10 pips and got out. Maybe a little risky. You can see where the market's come right back down to this spot. I mean, look at that. Came right back to this particular level. These highs right here. Now this is out of the Asian range, but just because this indicator, this was the first initial Asian range, see, this price right in here. But then it came out in London. London took it up a little bit higher. They expanded the range. Expanding the range, trying to entice people. They're building up liquidity because I believe that the market knew when news came out, when when Powell was going to talk, he has a lot of influence on monies, not just in the U.S., but all over the place. That market just went bananas. If you take a look at gold, a lot of markets reacted to that news, and it takes it a while for it to absorb. GBP CAD, 3 a.m. Now, you can see here, it took it a little while. It wasn't until about 4:30 where I finally really broke above this particular area right here. That's 20 pips. These all are little examples of things that you could look for, you know, if you want to scalp the market. A lot of people aren't scalpers. I tend to like scalping because I just don't have the patience and the nerves, really. My anxiety kind of works up trying to do these long swing trades. Usually the market just ends up going against me for whatever reason, you know. That just takes more zone to zone kind of trading. I just like to try to get my money and get out. Just get the hell out, right? Price came up. Look at all these rejection wicks right up here. 1, 2, 3, 4, 5. I mean, that's a tall tale sign. Market's coming back down. It came back into the range. So one thing I also noticed too, a lot of times when prices come in, here's the median price. Look how prices respect this area. Now, is it always this clean? No. I have taken trades based upon that. Once it broke out of that price range, I'm going in for a buy because I know it's going to come at least to the top of this range. Fill that. I'm sorry, not fill that way. It's not a word. It's going to come back up to this range right up in here. That's on CAD. Now look here. GBP Chief. I hadn't even been looking at this. Most of the time I won't even trade GBP Chief. I done messed around and didn't look at this, and had I caught this kind of a move when price came back up and broke these highs, first it broke out of this Asian range, I'm already alerted. I would have got in once it broke in right here, bam. Now, think about that for a second. How high did this initially come up through the day? 130 pips. You set your stop loss about median. Okay. 15 pip stop loss. You come in with your buy thinking, okay, I'm only going to get 10, 20 pips. That's all really what you're looking for. You move your stop loss straight on up. You move your stop loss up. You got your 10, 20 pips, whatever that is. You're thinking, I'm done, right? But just move your stop loss up. Okay, so you are done for the day. Now, if the market decides to go against you, you've made your $50, your $100, or whatever amount of money you're looking for your 10, 12 pips, whatnot. Now that your stop loss in place, here's a great example of just a massive bull run. If you'd have held your $5 a pip trade past your 10 pip minimum that you're looking for, 10 pip minimum, 15, whatever your particular minimum is for the day, and you've got enough wherewithal to hold on, and you moved your stop loss up here, you could have rolled that all the way up, you know, another 118 pips. So imagine, if you will, multiply that, do the math, or if you just decide to get out here, maybe come in for a re-entry. You know, this is just a few little examples of what could have been. You know, and a lot of people say, well, woulda, shoulda, coulda. But this is what it comes down to when you are patiently waiting for the market to talk to you, letting the market show you what it's going to do. Before this would have ever happened, I'd have been looking at this, noticing if I'm waiting for the break of the Asian high to come up right in here, I'm thinking, okay, where's my 10 pips at? My 10 pips is within that range. That's that wick fill right here. So here, that's within that range. I would have took a buy once it got up above this certain price. Right there, I would have came in right there. That's my signal. 10 pips. That's an 11 pip to come up to fill this range right here with 11 pips. That's a textbook easy trade right there. Moved my stop loss up once I saw price continue up, feeling good about the momentum, right? Moved my stop loss right up there. I'll let the rest run. But you know what, people? I missed that. And yes, I'm a big dummy for missing that. Because a lot of the time I'm focusing on GJ. You know, I focus on GJ a lot. And GSU. Not GSU, but GU. And I'm over here missing other opportunities, so, you know, lesson be learned. GBP NZD, nothing but mess. Really, for most people, this is a no trade zone right here. This is no trade. You could get in for a sell right here, but look how the market wicks. Because the market makers know, oh geez, they come up in here, we're going to take a price. I want to come in, I'm going to put my sell stop right in here. What do? Bring it down, slam. It came back down, hit the stops. Then they brought the price down to that range. Now they're in the middle. It's ranging. So, ladies and gentlemen, I don't want to carry this video out too long. This is just to give you a little insight about the London breakout and how you can utilize trading tools to help you in your visual analysis of the market. You know, in combination, of course, with price action. Price action is key. Like in these levels, goes up. You know, you can't just click a sell and buy just because you see a break. There's got to be some rules. You need to check your zones and your levels. You have to have clean ranges for the market to actually move within. If you don't have that, chances are you may only get 2 or 3 pips, and then it's going to go the other way, and you kind of just wasted a trade, or you might end up in a negative drawdown. But if anybody is wondering what this particular indicator is, so let me go up here. This, you can just go to FXN, then the trading view, type in FXN. This is by Rob Minty. Your Asian range, week and day separators, you don't need that. And your buy and sell signals, all these are just EMA crossing. You used to have little arrows or things that tell you buy and sell, buy and sell. Now they went to the actual EMA crossings. You don't need that. You can get it if you want, use it if you'd like, but I basically stick with just the Asian session range. It's really a great little tool. You could color in your London session, New York sessions. You know, these are fills. I'll give you an example. See, here was the Asian fill range right here. That would have been your range. Just like here. Tomorrow, this blue box area right here is going to disappear. It's going to leave this range, and this will appear to make a new parameters box. Right there, right there. Price came up above that range, went straight up. I will also use it in conjunction with my 50-period moving average, just for some extra confluence. I still use this strategy quite a bit. Look at that, came down, retested, price came below here, bam, went straight on down. That's what came down. So if you're watching the market, I use this in conjunction, together sometimes, just to add a little extra firepower to what I want to see the market doing. I don't trade based just on these alone, but these are indicators that I do use in my scalping strategies at certain times. Sessions are very important to help put a higher probability in my favor, and it's doing quite well. Is it 100%? Nothing ever is. But if you learn to use these indicators the correct way in conjunction with price action and where the market can go to and where it can't go to, checking, make sure you're always looking at the news, for Pete's sake. It's really important. As we came in, messed around, now prices just keep slowly creeping on up. So that's the intended direction. Messed around right here, now it's going to continue moving up. $51 pips. There you have it, ladies and gentlemen. I hope you enjoyed this video. If you find a little bit of value in this, I know I'm not very good at teaching these kinds of things, but I'm just trying to expose people to certain things. Got a couple of questions about anything, about what I'm sharing with you today, feel free to leave a comment. If you would, please like the video. That helps me get the videos out to more people. And I would appreciate it if you would subscribe to the channel, not just watch them, but actually subscribe to the channel. And I appreciate you watching. Y'all have a great day, and best of luck with your trading, everybody. See ya.